Welcome back. You're watching Market Fatafat right here on ET Now, a show where we get you all the stocks buzzing based on news flow as well as on technicals. And right now on technicals, we have Mileen Vasudeo joining us on the show. Very good afternoon to you, Mileen. And the first stock that you're going to talk about is GMDC. And where do you see this one headed from going on, or this one headed from here on?
If you see GMDC, GMDC had had reclaimed the 200-day moving average line on 26 April 23, and from there 10 to 15 days it made a sideways move, and now yesterday only we have got a breakout at 161 levels with huge volumes. So one can buy this stock at current level or on a decline up to 160, somewhere around 160, and keep a stop loss of 151. On the higher side, we expect this stock to test 186, 195 to outer extent of 210 levels.
Okay, let's move on to stock number 10 for today, and a name coming in from the QSR space. We had restaurant brand Asia, which reported its numbers. Now, operating performance was ahead of expectations. Restaurant brand Asia's consolidated numbers. Restaurant brand Asia is Burger King chain. So, obviously, consolidated revenues saw a growth of around 28.6% on a year-on-year basis, coming in at 514 crores, in line with what the street was expecting. India business saw 36% growth as well, while Indonesia business also grew by 14% on a year-on-year basis. The company has opened 73 stores in FY23, taking the total count to 391, and gross margins also have improved on a year-on-year basis despite that higher inflation that we saw coming in. EBITDA margins also a marginal improvement coming in there, which is better than what the street was expecting. So yes, a good set of numbers has clearly come in from the company. Keep an eye out on this one. Today, the stock is buzzing up and away in trade, 16% gain as of now.
All right, moving on, let's talk about Vedant Fashion, and this particular counter is in focus in today's trading session because promoters have launched the OFS to trim stake in the company. If you look at the stock at one point in time, it was down about 4%, which took the stock to 1 month low level. Right now, a sharp reversal coming in the counter, 2.3% uptick, as you can see it on your screen. Promoter Ravi Modi Family Trust had announced plans to sell about 7% stake in the company via an OFS, and the floor price for the OFS was set at around 1,161 rupees per share. There's also oversubscription option to sell additional 2.18% stake as well. If the oversubscription option is exercised, then the promoter will sell over 9.88% stake. Promoter Ravi Modi Family Trust held about 67% stake in the company as of March 31st. This is as per the shareholding pattern data. OFS is primarily for the purpose of meeting the minimum public shareholding norms of the market regulator. This is what Morgan Stanley had said in a note, as you can see it on your screen. You can Vedant Fashion's sharp recovery from the day's lowest point, now trading higher by about 2.5% as we speak.
All right, that aside, let's put the spotlight on aviation then, and you've got Interglobe Aviation, or Indigo, in focus. Will be coming out with its numbers later today, and we're expecting the net profits to actually decline by 41%, 843 crore rupees. And the lower yields are due to seasonality that could kind of impact the numbers this quarter. So we're expecting revenues to come in at about 14,000 odd crores. That would be lower by about 6% on year. The EBITDA is seen at 2,864 crore rupees, with the EBITDA margin seen declining to 20% versus 21.3%. Now, yields could be lower by around 9% sequentially. Higher air traffic, the stable PLF, and lower oil prices along with the currency, all of that will be worked into the numbers. Remember, the passenger air traffic has grown about 5% QOQ, and jet fuel prices as well have come in lower in the quarter gone by. That will reflect lower by 7%. The rupee has remained stable. The street will watch out for the headline numbers as well as the outlook on their international business, benefits of the Go First shutdown, commentary on compensation from OEMs, and what the outlook is as well for the guidance down the line, because as of now they have guided for high teen capacity growth.
Moving on to the next one, and Mileen, you've picked out LT Foods for us. How are the charts looking like for this one? What should we be expecting here?
Chart, we are seeing a lateral consolidation breakout at 112 levels, and it is still making a higher top, higher bottom formation on the chart. Even the momentum indicator, namely the RSI, is making a higher high formation. If you see the stock has started outperforming the benchmark indices and we expect the momentum to continue going ahead. One can accumulate at current levels on or in a decline up to 107 rupees. Keep a stop loss of 103. On the higher side, we expect 124 to 136.
All right, moving on. Lisa, let's talk about Endurance Tech and why is this particular counter in focus in today's trading session?
Well, yes, it's on the back of results, and they have reported a neutral set of results. Numbers are in line with the estimates. Talking about the revenue, that was up 7.5%, and it was supported by pass-through of the higher metal cost as well as strong order intake. Now, talking about margin, that was flat 12.8% versus 12.4% last year, and also the net profit that also was flat on year-on-year basis and stood at 136 crore. So, all in all, it was a flat set of number. The margin that was impacted and it was on the back of higher input costs, particularly the high energy costs in Europe. So, but the management is quite upbeat about the growth going forward, and that is on the back of the multiple acquisitions that they have undertaken, and also they are strong about it on the back of traction in the EV segment. So yes, that's Endurance Technologies for you, trading flat like its numbers.
Okay, that's the view coming in on stock number 14, Endurance Tech. Mileen, let's discuss your next mid-cap idea, Care Ratings, and it has been building momentum over the last 6 months or so, a nice 30% move. What's the outlook on the charts? When can it cross 700 with conviction?
See, if you see the weekly charts now, last 5 weeks, the stock was trading sideways, and now current week we have already seen that the volumes are picking up in these stocks. For last 3-4 days, we could see good volume accumulation in this stock. At present, yes, the RSI is also making good formation, and this stock is outperforming the benchmark indices. At present, one can accumulate at current levels at around 696. It's currently trading at 696 level. One can accumulate in the range of 696 to 685 levels. Keep a stop loss of say somewhere around 676. On the higher side, we expect the stock to test the levels of somewhere around 720 to 740 levels in a couple of weeks.
Okay, keep an eye out on those levels for Care Ratings. Ankita, the next stock that you're going to talk to us about is Teamlease. Why is this one in focus today?
On the back of results, VINI, Teamlease has posted its Q4 results, and we did see the consolidated net profit decline by 22% on a year-on-year basis. The revenue from operations for the company grew by 11% during the quarter at 2,000 crores. Compared to 1,800 crores on a year-on-year basis. We also had the Managing Director Ashok Reddy say that the general staffing business has witnessed uniform growth across the industry verticals with a strong outlook for the upcoming quarters, even though the margins have come under pressure due to external variables impacting the higher margin businesses of specialized staffing and DA. And that's the reason why Teamlease is going to be in focus today.
Move on and then talk about another number that is in focus, and that is Whirlpool. Now, when you look at the numbers coming in from Whirlpool, we're seeing a bit of a weakness over there. The revenues of the company are coming in at 1,673 crores versus 1,707 crores. Profits of the company have seen a decline on a year-on-year basis, and margins too have contracted by around 200 basis points. 6.3% versus 8.7% was what the EBITDA margin was at. Weak customer sentiment and increasing competitive intensity is something that has impacted the performance of the company. When you look at the note that has come in from Nuvama, they've downgraded the stock to a reduced target price of 1,200. They are downgrading it as they believe that they shall enter an extended earning downgrade cycle. So yes, keeping an eye out on this one. The business is not showing signs of recovery or any green shoots over there. Discretionary demand is weak with refrigerators feeling the most pain, and competition obviously is a factor that Nuvama is keeping an eye out on. As of now, you can see the stock has recovered from the day's lowest point and is trading with gains of almost 14%.
All right, moving on, let's talk about BLS International, why this particular counter is in focus. At one point in time, the stock actually tanked as much as 7%, which is the most in about 5 months. This after 1.14 crore shares actually changed hands on the exchanges. If you see the entire amount, it was about 2.8% of equity that changed hands via block deal earlier this morning. Now the stock has seen a tad bit of recovery from the day's lowest point. Nevertheless, almost 5% decline coming in for BLS International. It's the second day of decline coming in for the company. Remember that we are yet to get the details about the buyer and the seller in this particular block deal, but BLS definitely under pressure post that deal today.
All right, let's shift gears then and focus in on a defense stock. HAL or Hindustan Aeronautics in focus today as the company came out with its conference call, and very optimistic outlook is what they're flagging off. They said that they will reach double-digit revenue growth by FY24-25. They're looking to manufacture and commission the LCA Mark 1 HTT-40, and the EBITDA margin guidance that stands at about 26 to 27%. The order book stands healthy at 82,000 crore rupees. The company said that they are taking on a significant efforts in order to promote their exports as well, which will be leading from countries like Algeria, Indonesia, as well as the Middle East and Thailand and Malaysia. Supply chain concerns, according to the management, are cooling off, and Air Force is still flying through. They said the Army has grounded it. There have been some accidents that have taken place in the last 2 to 3 months. But down 1% is where HAL is currently at.
Let's move on. And Mileen, the next stock that you're talking to us about is AIA Engineering. How are the charts for this one? Should we expect a good uptick here as well?
Sitting on the weekly chart is properly maintaining a higher top and higher bottom formation. Now, if you see, the stock made a high of 2988 on 6th of April, and then it sharply corrected to the levels of say somewhere around 2657 levels, and from there it has started bouncing back. Now, if you see the daily charts, the daily chart is showing a double top, double bottom formation at current levels, that is at 2657 levels, and from there it is bouncing back. Now, it has also taken a good support at around at 2657 is also the 200-day moving average line, and from there it has bounced back very sharply. So one can accumulate at current levels or on a decline up to somewhere around 2800. Keep a stop loss of 2750. On the higher side, we can expect the stock to retest its prior high of 2988 and even extend its gains further towards 3100.
All right, moving on, let's talk about Thermax. Lisa, why is this one in focus?
It's on the back of results, and Thermax has delivered an inline set of numbers. As you can see, the stock is under pressure. It's almost like around 6% down. The revenue that was up 16%, and it was supported by the industrial and the industrial infra segments, which grew at around 12% and 16% respectively. The EBITDA, that also the margin improved at around 8.6% versus 6.7%. But talking about the order book, though that was at 1.2 times the TTM revenue, but the order inflow that was down 34% on year-on-year basis and stood at around 2,250 crore. Well, what the brokerages are saying, Macquarie has come out with a report on Thermax, and they say that the company has delivered inline set of numbers. They have maintained a neutral on the stock at 2,300. Also, strong execution and improving margin front they have seen in this quarter. But going forward, the margin and the return profile, that remains a key concern to watch out for. So, well, as we can see, Thermax, and also do remember that Thermax in the last 5 days, it ran up 10%. So, it can be a part profit booking too. So, that's Thermax for you, down 6% as we speak.
All right, there you have it. That's the cue coming in on Thermax. Moving on then, let's discuss Mileen's next recommendation. And you've picked out another stock that's close to its 52-week high, and that is Viatec Wabag. How does it look on the charts?
If you see Wabag, it has already crossed the 5 years high. The 5-year high was somewhere around 204, and then it has started making a higher top, higher bottom formation on the it was 404, and it started making a higher top, higher bottom formation on the daily chart. Now, one can accumulate at current levels or on a decline up to say somewhere around say 415 levels. It has got good support at around say somewhere around 400 to 390 levels. On the higher side, we expect this stock to move towards 460 levels to 475. So one can expect a good move in Wabag.
Let's move on and talk about K Fintech, Ankita. This one is in focus on the back of a brokerage note, I believe.
That's
Correct, Vinny. There's a brokerage note that's come in by Kotak on KFintech. Now, according to them, they have initiated a buy with a target price of 400 rupees per share. Now, they feel that the diversified financial infrastructure play is going to be good. The mutual fund RTA business is facing headwinds for now, but the revenue and client diversification is going to be absolutely critical for the company. Now, they also see multiple growth levers beyond the domestic mutual fund registry market, and they feel that the company's strategy to accelerate growth will augur well with building scale. They also see healthy cash flow convergence for the company, and they're expecting a 15% EPS CAGR over FY24 and 26. And on the back of that, KFintech is up almost 3% in trade.
All right, moving on. Mileen, let's talk about Dynamatic Tech. How are the charts looking for this particular company?
Yeah, on the weekly chart, it is already up by 3 weeks, and now on the daily chart, if you see, the RSI has already crossed 70 levels. Even the stock is clearly outperforming the benchmark indices. Here, it is very difficult to buy the stock at current level because it is already on the higher side, and risk-reward ratio is not in the favor. But those who are holding this stock can maintain a stop loss around, say, somewhere around 33.50. On the higher side, yes, this stock could test the levels of 36.50 to 3700 levels in a couple of months.
Okay, keep an eye out on a Dynamatic Tech. But let's move on and talk about a bumper earning that is coming, earnings zamaka as we call it as, and that one is Jindal. So when you look at the revenue, on a year-on-year basis, we are seeing a growth of around 31%. Profits of the company have seen a growth of 41% as well. And even the operating performance has been strong as well. EBITDA up by 50% on a year-on-year basis. Margin seeing a 150 basis point expansion as well. The EPA jump is of by around 2.4 times to 9.2 rupees per share as well. So overall, when you look at the numbers, what worked out well? One, it was all-time high quarterly EBITDA. Order book is inflated at around $1.5 billion US dollars. So keeping an eye out on that one. That is a jump of around 150% as well. Both India and foreign subsidiaries are performing well. They benefited from a good order mix and gain from the DI pipes as older orders now have a better spread than previously as well. So good set of numbers that have come in from the company.
Right. Moving on, let's talk about Jubilant Ingredient. And this particular counter is in focus. Nuvama has come out with a note where they're maintaining a buy stance on the company. However, they have reduced the target price to about 749 rupees per share from earlier 1029 rupees per share. They're saying it is dismal performance coming in the quarter gone by, and this was impacted by pressure in their nutrient business, as well as they're seeing headwinds in their specialty chemicals business as well. This is on back of high coal costs and lower utilization of diketene. They're also saying the overall sales, EBITDA as well as PAT, all of them fell, and they were below their estimates as well. The recovery is visible but will only reflect in the second half of the current financial year. So on back of that particular note, you can see Jubilant Ingredient that's under pressure. There's a target cut from Nuvama on that particular counter.
All right, 390 thereabouts is where the stock is at. Moving on to stock number 27, let's discuss Coal India as the management in their key takeaways with Nuvama actually listed out a lot of details in terms of their costs as well as the dividend yields. Now, they said that the costs have peaked out for Coal India. The full provisioning of wage hike has been seen in FY23. They're expecting a dip in employee costs due to the absence of arrears, and the prices of explosives as well as diesel, that has also declined. Now, according to the management, volume growth for FY24 is seen in the range of about 8 to 9%, and they're optimistic on price hikes under the FSA in FY24. Nuvama said that the high dividend yield will cushion the downside on Coal India in the long haul. But the stock trading on the lowest point of the trading day, just about clutching onto 240.
Okay, let's move on. And Mileen, you picked out one more rice stock name coming in there, and that is KRBL. Similar charts to Healthy Foods. What are the expectations here?
You see, KRBL had given a good price and volume breakout on 19th of April, and from there it is gone sideways. But now it is picking up some momentum, and currently, if you see the momentum indicator, namely the MACD, is positively priced. This clearly suggests that the stock can continue its upward momentum. The stock is clearly outperforming the benchmark indices, having a higher relative strength. Now, one can accumulate the stock at current levels, keep a stop loss of 380. On the higher side, you could expect the stock to test the levels of 424, 450 levels in a couple of weeks.
Well, that's the stock that Mileen is tracking on the charts. Moving right on then, Lisa, let's discuss the earnings of Jindal Stainless.
Yes, Vinny, Jindal Stainless Steel it's up like around 5%, and that is despite a 20% fall in the net profit on year-on-year basis. So why is it soaring in trade? That is because of strong sequential numbers. Well, talking about the numbers, it scored on all parameters. Revenue was up 9%, EBITDA that also improved 32%, and the margins stood at 11% versus 9.6% on a sequential basis. Well, do remember that at the fag end of Q3, the government revoked the export duty, and because of that, the company, they ramped up their export sales, and that was a good turnaround for the company. So, well, they reported highest ever quarterly sales volume this quarter, and also the net debt ratio that also improved to 0.2. Well, in the last 1 year, the company's shares that they have rewarded the shareholders well. It was around 100% return for the shareholder, and we can see today that on the back of good set of numbers, the stock is up 5%.
All right, it's not VINI, but it's Avan. Nonetheless, that's the stock that Lisa is flagging off. Okay, let's move on then to Ankita to talk about Max Health.
Yes, Avan, Max Health, there is a brokerage note that's come in by Jefferies, and on the back of that, the stock is up almost 2%. Now, Jefferies has maintained a buy and hiked the target price to 600 rupees from 550 rupees per share. Now, they see that a marginal beat coming to the numbers. Now, the EBITDA growth momentum they feel should sustain in FY24 on the back of new bed additions, and they have also hiked their FY24-25 EBITDA estimates. For FY24, they have hiked it by 4%, and for FY25 they've hiked it by 8%, and that's the reason why Max Healthcare is buzzing in trade today.
All right, that's Max Healthcare for you, and that indeed is the last stock that we discussed on this edition of Market Fatafat. Thank you so much, Mileen, as well as Kunal, along with Lisa and Ankita for joining us on the show. And with that, it's a wrap on this edition of Market Fatafat. Goodbye from Ava and Vini, myself, and the team that put the show together. Stay tuned. Closing trades coming up next.